What if you could get paid just for owning a piece of the biggest companies in the world? And I'm not talking about chump change. I'm talking about a river of cash flowing directly into your brokerage account year after year. The 3 highest-paying dividend stocks in the Dow Jones are currently offering yields that crush savings accounts and bonds. But is it a trap? Are these massive payouts a sign of incredible opportunity, or a warning signal that these giants are about to stumble? Stick with me, because in the next 9 minutes we're gonna break it all down. Hey everyone, and welcome back to the channel. Today we're on a treasure hunt within one of the most exclusive clubs in the stock market, the Dow Jones Industrial Average. We're looking for the stocks that pay you the most just for holding them, the dividend kings. Now, I've seen a lot of people get burned by chasing high dividend yields. It's a classic mistake. You see a stock with a 10% yield and think, wow, that's a 10% return guaranteed. But it's not that simple. So, how do dividends even work? Real quick, a dividend is just a company sharing its profits with you, the shareholder. The dividend yield is what tells you how big that payment is relative to the stock's price. Let's imagine a company, Cosmic Coffee, trades at $100 a share and pays out $4 a year in dividends. You take that $4, divide it by the $100 stock price, and you get a 4% yield. Simple, right? But here's the critical part. That yield can be misleading. If Cosmic Coffee's stock price suddenly drops to $50 because of bad news, but they still pay that $4 dividend, the yield doubles to 8%. A higher yield doesn't mean you're getting more money. It often means the stock price has fallen. It can be a red flag that the company is struggling. But what about the Dow? This is an index of 30 massive blue-chip American companies. So when we find the highest yielders here, it's a little different. These aren't just any companies, they're titans of industry. Today, we're putting 3 of them under the microscope: Verizon, Chevron, and Merck. Are they incredible bargains or are they value traps? Let's find out. First up is the telecom giant, Verizon Communications, ticker symbol VZ. Right now, Verizon is boasting a massive 6.3% dividend yield. Verizon is a household name, providing the wireless and broadband services that basically run our lives. We're talking about a company with a market value of around $184 billion. They are an absolute cash cow, generating billions of dollars in free cash flow every single year. Now, the bears will point to Verizon's mountain of debt, and that's a fair point. But with the cash they generate, they have plenty of firepower to pay down that debt and keep sending out those juicy dividend checks. In fact, they've been consistently, if slowly, increasing that dividend over time. Plus, they're not just sitting still. They are actively expanding their 5G and fiber networks, which is key for future growth. From a valuation standpoint, the stock looks pretty attractive. Its forward price-to-earnings ratio, or PE, is around 9.3. That's right in line with its 5-year average, suggesting the stock isn't overpriced. So for Verizon, you're getting a huge yield from a company that provides essential services and is trading at a reasonable price. That's a powerful combination. Alright, we're just getting started. If you're finding this breakdown valuable and want to become a smarter investor, do me a quick favor and hit that subscribe button and ring the notification bell. It's free, and you won't miss out on future deep dives like this one. Let's move on to our second high yielder, the energy behemoth Chevron, ticker symbol CVX. Chevron is currently offering a very respectable 4.61% dividend yield. As one of the largest integrated oil and gas companies in the world, Chevron is another cash-generating machine with a strong balance sheet. For those of you looking for a reliable income stream, get this. Chevron has increased its dividend payout for 38 consecutive years. That is an incredible track record of returning cash to shareholders through thick and thin. Their annual payout has grown significantly from around $4.48 in 2018 to $6.68 recently. This isn't a company that's struggling to pay its dividend, it's a company that's proud to grow it. Now, investing in Chevron is obviously a bet on the long-term strength of the energy sector. If you believe the world will continue to need oil and gas for the foreseeable future, this is a fantastic way to get exposure and get paid while you wait. In terms of valuation, its forward price-to-earnings ratio is around 17, which is a bit higher than its 5-year average of 14. This suggests the stock might be a little bit on the pricier side right now, but for a company with this kind of dividend history and financial strength, it could easily be worth it. Last but certainly not least, we have the pharmaceutical giant Merck, ticker symbol MRK. Merck comes in with a healthy 3.87% dividend yield. With a market value over $200 billion, Merck is a cornerstone of the healthcare industry. Like Chevron, they have a great history of dividend growth, with their annual payout rising from about $1.99 in 2018 to $3.20 recently. What I like about Merck is its diversification. They have blockbuster drugs for cancer like Keytruda, treatments for diabetes, a whole division for animal health, and they're a major vaccine producer. This isn't a one-trick pony. Now, the biggest concern for any major drug company is patent expirations. When a patent on a drug like Keytruda expires, generic competition can flood the market. However, Merck is well aware of this. They have a deep pipeline of new drugs in development and are actively pursuing strategies to protect their most profitable products. And here's the kicker. The stock looks undervalued. Its forward price-to-earnings ratio is just 9.2, which is well below its 5-year average of 12.4. This suggests that the market might be overly worried about those patent cliffs, creating a potential buying opportunity for long-term investors. So should you buy the 3 highest-paying dividend stocks in the Dow Jones? Unlike many high-yield stocks that are flashing serious warning signs, Verizon, Chevron, and Merck all look like solid, promising investments for a long-term portfolio. You have Verizon, the undervalued cash cow providing essential services. You have Chevron, the reliable energy giant with an incredible dividend track record. And you have Merck, the diversified and potentially undervalued pharmaceutical leader. These aren't get-rich-quick schemes. They are titans of industry that are committed to sharing their massive profits with you. For investors focused on generating income and building wealth over time, all 3 of these companies are absolutely worth a closer look. But what do you think? Are these Dow dividend stocks a buy, hold, or sell in your book? Let me know your take in the comments below. I read every single one. Thanks for watching, and I'll see you in the next video.